While the entire financial world is obsessing over Bitcoin hitting new highs and gold breaking records, something far more explosive is quietly building beneath the surface. And if Francis Hunt is right, silver is about to do something that catches almost everyone completely off guard. We're talking about a move so violent, so unexpected, that it could redefine wealth preservation for an entire generation. And the signs? They're already flashing red. Welcome back to the Wealth Continuum, where we cut through the noise and show you what's really happening with your money before the mainstream catches on. If you're serious about protecting your wealth in what could be the most chaotic economic period of our lives, hit that subscribe button right now, because what we're about to uncover today is not going to make headlines until it's already too late for most people to position themselves. And before we dive deep, drop a comment below and let me know where you're watching this from, because this situation is playing out globally, but it's going to hit different regions in very different ways. Now, let's talk about Francis Hunt. This isn't some random analyst throwing darts at a board. Hunt has been studying market cycles, technical patterns, and monetary systems for decades. He's the kind of trader who sees what institutions see before retail investors even know there's a game being played. And when someone like that starts talking about silver with the kind of conviction he's been showing lately, you don't just listen casually, you pay very close attention. Because here's the thing most people don't understand about silver. It's not just another shiny metal. It's not gold's poor cousin. Silver sits at the absolute intersection of monetary metal and industrial necessity. And that position is about to become the most dangerous leverage point in the entire commodities market. Think about this for a second. Right now, in January 2026, we're living through one of the strangest economic contradictions in modern history. The Federal Reserve has been playing this impossible balancing act, trying to manage inflation that refuses to stay dead while simultaneously dealing with a banking system that is far more fragile than anyone wants to admit. We saw what happened in early 2023 with Silicon Valley Bank and the regional banking crisis. That wasn't a one-time event. That was a warning shot. And since then, despite all the reassurances from Jerome Powell and Treasury Secretary Yellen, the underlying structural problems haven't been fixed. They've been papered over with more debt, more liquidity injections, and more promises that somehow this time it'll be different. But here's where silver enters the picture in a way that almost nobody is connecting the dots on. Francis Hunt has been pointing to something that should terrify anyone who understands market mechanics. The silver market is tiny. Compared to gold, compared to treasury markets, compared to equities, the actual investable silver market is microscopically small. We're talking about a market where a few $1 billion moving in the right direction does not just create ripples, it creates tsunamis. And right now, multiple forces that have been building for years are converging on this tiny market at exactly the same time. Let's start with the supply side, because this is where things get genuinely disturbing. Silver mine production peaked years ago. We're not discovering massive new deposits. The easy silver has already been pulled out of the ground. What's left requires more energy, more cost, more environmental hurdles. And here's the kicker that most analysts completely miss. Roughly 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver supply is not really responsive to silver prices the way you'd expect in a normal commodity. If copper demand drops, silver supply can actually fall, even if silver prices are screaming higher. That's not a market. That's a trap waiting to spring. Now layer on top of that what's happening with industrial demand. This is where Francis Hunt's analysis gets really interesting. Solar panels, electric vehicles, 5G infrastructure, advanced weapon systems, medical technology, every single one of these growth industries is silver intensive, and we're not talking about modest growth. The push toward electrification and renewable energy is being driven by government mandates across the entire Western world. The Inflation Reduction Act in the United States alone has funneled hundreds of billions into green energy projects, and every single solar panel requires silver, not a little bit, about 20 grams per panel on average, and some new technologies require even more. The math here is simple and brutal. If solar installations continue growing at current rates, industrial silver demand is going to exceed total global mine supply within the next few years. Not might, will. But wait, because it gets worse. While industrial demand is surging, something else has been happening quietly in the background. Central banks, particularly in Asia, have been accumulating precious metals at a pace we haven't seen in decades. Now most of that attention has been on gold, and rightfully so. Countries like China, Russia, India, they've been hoovering up gold to diversify away from dollar reserves. But Francis Hunt points out something critical. Silver has historically traded at specific ratios to gold. For most of human history, that ratio sat somewhere between 15 to 1 and 30 to 1, meaning 15 to 30 ounces of silver equaled 1 ounce of gold. Right now, as we speak in early 2026, that ratio is still hovering above 70 to 1 in some markets. That's not a market price. That's a distortion. And distortions don't last forever. When they correct violently. Here's where the geopolitical angle becomes impossible to ignore. The United States is sitting on over $34 trillion in national debt. The interest payments on that debt are now exceeding defense spending. Let that sink in. We're paying more to service our debt than we are to fund the entire military. And with the Fed having raised rates to fight inflation back in 2023 and 2024, those interest costs aren't going down anytime soon. Every time the Treasury has to refinance debt at these higher rates, it's locking in more structural bleeding from the federal budget. This is unsustainable, and everyone knows it. But here's what they're not telling you. When debt becomes unsustainable, governments don't just admit defeat and cut spending. They devalue the currency. They print. They inflate their way out of the problem. And when that happens, hard assets don't just go up in price, they explode. Francis Hunt has been very clear about this. He sees silver as one of the most asymmetric bets available right now. The downside is relatively contained. Silver's already been beaten down for years. It hit nearly $50 an ounce back in 2011, then spent over a decade going basically nowhere while everything else inflated around it. But the upside? If the monetary system faces even a fraction of the stress that's currently building, if industrial demand continues on its current trajectory, if investors suddenly wake up to the supply deficit that's emerging, we're not talking about silver going to $60 or $70. We're talking about triple digits. And in a real crisis scenario where people lose faith in the dollar's purchasing power, Francis Hunt and others like him see silver potentially going parabolic in ways that would make the 2011 run look like a warm-up. Now, I know what some of you are thinking. You've heard this story before. Silver bugs have been predicting the big breakout for years, and it keeps not happening. And that's fair. But here's what's different this time, and this is critical. The macro backdrop has fundamentally changed. In previous decades, when silver rallied, it was largely speculative. It was driven by inflation fears that central banks could squash by raising rates and restoring confidence. But we're not in that world anymore. The debt levels are too high. The political will to truly tighten and accept a deep recession doesn't exist. We saw that play out in 2023 and 2024. The Fed raised rates, sure, but the moment the banking system showed cracks, they reversed course with emergency lending facilities and liquidity. They blinked. And the markets know they'll blink again. Add to this the physical shortage dynamic that's starting to appear. Premiums on physical silver coins and bars have been elevated for months now. Dealers are reporting delays. Mints are struggling to keep up with demand. And this is happening while silver is still relatively cheap in historical terms. What happens when the general public, not just the hardcore precious metals community, but regular people who are watching their savings accounts lose purchasing power every single month? What happens when they decide they want real money, tangible assets, something they can hold? The silver market cannot handle that kind of demand surge. The infrastructure isn't there. The available inventory isn't there. And unlike gold, where central banks hold massive reserves that can theoretically be mobilized, there are no strategic silver reserves. Governments sold most of that off decades ago. Francis Hunt also points to the technical setup, and this is where his expertise really shines. From a chart perspective, silver has been consolidating in a massive pattern for over a decade. It's built a base, it's tested resistance multiple times, and held support. And in technical analysis, the longer a consolidation pattern builds, the more explosive the eventual breakout tends to be. We're talking about energy coiling tighter and tighter, and when it releases, the move is fast, violent, and difficult to chase. Hunt sees this setup as one of the cleanest long-term bullish patterns in any market right now. The question isn't if it breaks out, it's when. And more importantly, are you positioned before it happens? Or are you going to be the one trying to buy after it? It's already up 50% in 3 weeks? Let me ask you something, and I want you to really think about this. If you knew with reasonable certainty that a financial asset was undervalued, underowned, facing a structural supply deficit, poised to benefit from both industrial growth and monetary debasement, sitting at a historically extreme ratio to its sister metal, and showing a technical pattern that screamed imminent breakout, would you ignore it? Would you wait for confirmation? Or would you quietly, calmly start accumulating before the crowd figures it out? That's the position Francis Hunt is laying out. He's not saying bet the farm. He's saying if you're trying to preserve and grow wealth through what's coming, silver deserves serious attention right now, not next year when it's already moved. And let's be brutally honest about what's coming. The United States is heading into an election cycle that's going to be vicious. Spending will not decrease. Both parties have shown zero fiscal discipline. Whoever is in power will continue using the Treasury and the Fed as tools to manage short-term economic pain. Consequences be damned. That means more money printing, more debt issuance, and more pressure on the dollar's long-term credibility. We're already seeing countries like China and Russia settling trade in yuan and rubles, pushing deals that bypass the dollar entirely. The BRICS nations are openly discussing alternatives to dollar dominance. This isn't fringe conspiracy theory stuff anymore. This is financial reality unfolding in real time. And when the world's reserve currency starts losing its grip, people don't flee into other paper currencies. They flee into things that can't be printed: gold, silver, real assets. But here's the twist that makes silver uniquely explosive compared to gold. Gold is already expensive. It's already hit all-time highs above $2,600 an ounce at points in 2024 and early 2025. Institutions own gold. Central banks own gold. It's established, respected, understood. Silver, on the other hand, is still the underdog. It's still cheap enough that regular people can accumulate meaningful amounts. A few $1,000s buys you a serious stack of silver. That same amount barely gets you an ounce of gold. And when markets move, when fear takes hold, retail and small investors pile into what they can afford. That's silver. And that buying pressure, combined with everything else we've talked about, creates a feedback loop that can send prices vertical in a shockingly short period of time. Francis Hunt isn't alone in this view, but he's one of the few willing to state it clearly and back it with analysis that goes beyond hopium. He's looking at cycles, at fundamentals, at monetary policy trajectories, and at human behavior under financial stress. And all of it points to the same conclusion. Silver is mispriced, dramatically so. And the correction, when it comes, is going to be one of the most significant wealth transfer events in the commodity space that we'll see in our lifetimes. The only question that matters is whether you're on the right side of that transfer. So here's what I want you to think about as we wrap this up. We're living in a time where the rules of the game are changing. The old playbook of 60-40 stocks and bonds, of trusting central banks to manage everything smoothly, of believing that inflation is transitory and under control, that playbook is being rewritten in real time. The people who see that early, who adapt, who position themselves in assets that can't be manipulated or printed away, those are the people who are going to preserve and build wealth. The people who cling to the old narratives, who wait for mainstream confirmation, who need CNBC to tell them it's safe to move, they're going to be the exit liquidity for everyone else. Francis Hunt is giving you a roadmap. Not a guarantee, not financial advice, but a deeply researched perspective on why silver could shock everyone next. The setup is there. The fundamentals are there. The technicals are there. The macro environment is there. All the pieces are on the board. What happens next depends on whether you're paying attention or not. If you found this valuable, make sure you are subscribed to the Wealth Continuum, because we're going to keep tracking this story as it unfolds. And drop a comment below. Tell me, do you think silver is about to have its moment, or is this just another false alarm? I'm genuinely curious what you think, because this conversation is just getting started, and the next 12 months are going to be absolutely critical. Stay sharp out there.